Hey everybody, Day Trader Rockstar here, and I'm doing a special individual video on a really good setup I feel that is approaching right now. This is Cigna. Cigna is a healthcare plan group, Cigna Group, the healthcare plans. And as I again, let me introduce myself. Maybe you're hearing this for the first time. I'm using the platform, the TradingView, to do this individual video just to test it out and stuff. So if you're not familiar with me, um, I go by Day Trader Rockstar. I broadcast live every day on daytradingradio.com. We broadcast from 7:30 to 4 o'clock every single day, and we do a market show. We've been doing it from 2007. I've been trading since 1996, excuse me, full time. And we teach a methodology of trading there, divergence methodologies, high probability setups, scalping, futures, options, and stocks, and all together. So this setup, Cigna symbol CI, looks like a fantastic opportunity for a huge, just a huge gainer and getting in on the bottom. I'm going to go over some of the criteria that I show and why I think this is ready to go in a big way. All right, so let's just start that off right here. I'm going to just go through the process. I'm here at the office today, and I'm working on what we call the high probability watch list. And the high probability watch list is a video that goes out every Friday to our members here at Day Trading Radio that outline the setups that are going to be moving the next day, the next week, actually. It goes out on Friday for the next following week. And typically there's, anywhere between 5 and 10 stocks on there. This week there's quite a bit. And this is considered one of the best bets. Just to throw out there, I have charts for the other ones. Boeing for this week. Paychecks is for this week, and Disney is the number one. But this, is going to qualify. If not number tied with Disney, it's number two. Cigna, it's moving up just because I've been doing some more research on it, and that's why I'm bringing you some more information on it. Now, what I'm going to do is just go through the process of me doing the watch list, video, doing the watch list, and this is how I break it down. Now, I work off of a bunch of different indicators, and indicators myself could be different things to you. An indicator for me is a trend line. An indicator for me is a moving average. An indicator for me is a recognizable pattern. An indicator for me is a reversal candle. And the most important indicators here are these stochastic bands on the bottom. I have one right now. Typically, if you look at my screen, I have 3 to 4, which represent different time frames. So we look for all these to line up. Now, you can see Cigna has pulled off of about $340 recently, and is all the way down to about $250. That's a nice pullback. The red line here represents the 200-period moving average. It's cutting through, and that's really a far move off of that. All this right here, the recognizable channel hasn't broken out, hasn't changed the trend. The channel trend is down. So that means that, of course, the trend is down. All right, here's some important parts of this. All right, this is very important. The oversold stochastic, that's our first key level here. We always like to be in this when our stochastics are not aggressively moving in a direction. If you can see, when the stock moves down, stochastics typically move down. When the stochastics or momentum moves up, the price typically moves up until you move down and move up and then move down. And now you can see we're down here, about to start to turn back up. So I feel like we're going to break out of here to the upside. Now, sometimes you could have news that affects stocks. Nothing's guaranteed or anything, but this is an important level right now that we're just getting oversold and just starting to turn back up. Now, I have another chart here. I don't know if this chart is going to come up or not on my video screen. I wish I could show you the different charts, but I'm using their platform, the TradingView platform, so I'm not 100% sure I'm going to be able to show you a different chart on this, so I'm not even going to mess with it. But on my other charts, there is a how should we say, a couple retracement trend lines. If we go back, there's a couple different other ways of charting this out. And again, let me see if I can bring it up. I don't know if you're going to be able to see this or not. That's the paycheck. Let's take a look at the CI here. I don't know if you could see this or not. See this channel? I don't know if I'm overlaying it. So maybe you can, maybe you can't. Here's the overlaying channel. And we had the pop up and the retracement, and we're kind of holding on to that. Now that you see that, I'm going to kind of point that out to you. We're going to adjust this trend line a little here. Let me pause this a second. All right, I lowered that lower trend line, and now what you're seeing is kind of this wedge pattern. Whenever we break out of a wedge to the downside, that's what we call a capitulation or a capitulatory move. And when we break back into that, the integrity of that lower trend line is very important, and we'll continue to maintain its integrity all the way down. So when we have something that's identifiable through bots and algorithms that point out, very easy to understand what a trend line is. It's 2 points that is extended, and each time you get down to that extension, you have 1, 2, and you draw a straight line. That straight line is going to go to infinity. And every time the price comes down to it, you're going to look for a reaction. Unless you break through it and then break back up to it, that straight line still represents an important level. So one of my best trade setups is when you have a capitulation move or some news, you break down and then you get back into the original pattern and come back and you test that trend line that was originally there. That is your buy signal. So we just had that. So you can see we're basically right on the area. Combined with that, with the stochastics being oversold here, it is textbook. This is a really good setup. Plus the 200 period moving average. Now, here's a couple kickers for you. All right, I'm going to put a couple things on the screen here for you. I want to point out a couple of the important fundamental things on this stock here: the price to earnings ratio, or the PE, and the price to earnings growth ratio, which is the PEG. Now, we know that, or maybe you don't, but a low PE is very important to determine the value, or if a stock is undervalued or overvalued. With everything equal, the lower the PE ratio, the better the investment. A PE less than 20 is good. Anything higher than 30 is considered bad. So you can see this PE ratio is 11.71 here. That is very, very good and would be considered undervalued. Now the price to earnings growth ratio is kind of a similar setup here. All right, let's take a look at this. All right, so the PEG here, the price to earnings to growth ratio, the PEG ratio, gives a little bit more information. In theory, the PEG ratio, value 1, represents a perfect correlation between the company's market value and its projected earnings growth. PEG ratios higher than 1 are generally considered unfavorable, suggesting the stock is overvalued. Conversely, ratios lower than 1 are considered better, indicating the stock is undervalued. We have a 0.88 here on a PEG ratio. So this is very good too. Not to mention, I'm not going to go into all the updated, and again, this is coming from an article here that said Daiwa Securities here reported that they increased their holdings in Cigna Group by a staggering 74% during the last quarter. This goes with many other funds that added to their position. And again, you could look up that on your own there. So now we're going to break down the chart and give you where I think this thing is going. All right, I filled in the important details here. So we're going to have an alert go off at 254.50 if we break that level. That's going to kind of give us an alert that we're getting a higher high. We're kind of breaking out of this 3-day base here that we gapped down on, and we kind of went sideways. We're right up against resistance, and we're looking for this to break out and this big trend line to break. Now, I have a big target on this. Consider it's in that 250 area. I'm looking for that 270 area, 20-point move. So I think this is a high, again, we have the stochastics in our favor. We have this channel, a wedge pattern holding the trend line. We had some follow through on Friday, and we have some follow through possibly early next week. Have a great PEG ratio, great PE ratio. The only thing I will throw out here, the only thing that is a possible landmine, are earnings on May 5th. Now, May 5th is going to be end of next week or the beginning of the week after. Let me double check that. What is today? Today is the 30th. May 5th will be on a Friday. So it'll be Friday. So we have Friday to make a move on this. And I'm not going to say we're going to get to our target on Friday before Friday. I do think we're going to move up tomorrow, Monday, and Tuesday. Holding into earnings is always a gamble. and I hate that. But if this actually gapped down, it would be a screaming buy. So it's up to you if you want to take a shot on this before earnings or wait until after earnings in case it does get a smackdown. If it does get a smackdown, I think you're going to get a big reversal on this. Something like when you gap down back here and then you just moved right back up. You gap down and you move up. So in this case, we'll see what happens. It might come out with earnings and it might run. So, either way, the way I'm going to approach this, I'm going to try to get some options. I do have some options in it already. And I have to mark that down for you right now. Hold on. What are my options on this? But I want to go out a little bit further on this. I want to go out a little bit further. Actually, I got the June 2nd, 265s. I picked up at $3.65. But I want to look into these a little bit more. I'll put this up here for us, just so we have it. Let's see here. I got one of those, and I have some other ones here. Do I have it up? Yeah, I have the Mays. But the Mays, again, I'm a little concerned that they might be a little early on that. They come out May 12th. It's right after earnings. But I would like to go out a little further on this. So that June, anything past June, I feel that this is going to be a fantastic trade. This is not bad at all. The 265s. Depending on what price you're looking at, you're definitely going to get a range of prices here. The 365 is doable for me. I like that. Trade right now. Again, oversold. Everything looking pretty good. We're going to be watching this. I'm going to be adding to this. I actually have two other. I have the May 12 260s and 265s, and now I have the June 265s. And I will continue to add to this, and I would be all over this if it gapped down to this area here. Now, if it did gap down and moved up, didn't get up to our price level, earnings came out, and for whatever reasons, earnings was disappointed, and it gapped down and it hit its stop, I would be buying down here. I don't have an alert down here. Typically, sometimes we would put an alert down here and kind of alert us, but I'm going to be on top of this because I'm holding it, and that will not be a buy. But if it does get down to this level, know that I'll be looking at it. All right. So that's a little special updated video on this. One of my best bets going into next week. And don't forget earnings on this on May 5th. And it could be a big mover. And everything looks pretty good on this. All right. Hope you enjoyed that. I'm Day Trader Rockstar from daytradingradio.com. Let me post that. Oh, did a lot of work this weekend. I should put a video. I should. Radio.com is where we are from. And actually, if you use this link here, go to this link, dtr.tv/free, it will give you 10 days free alerts, access to the site. You get all these charts. You get everything delivered to you. Remember, each one of these setups, each one of these lines, anything that has a price target on it gets set up and put into our HPS watch list. And the HPS watch list has all the charts that are connected to your account. So anything we have right now, tons of stocks, and when they hit their targets, hit their buy zones, hit their profit zones, or hit their stops, you get an instantaneous text or email, depending on how you have it set up. Just go over and check it out, dtr.tv/free, if you want to get those alerts for 10 days free, no credit card or anything. Have a good day, everyone. I'll catch you guys Monday morning in the markets.